You know, this is a city literally where dreams are made, people who make it to the top floor. But there are those whose dreams completely get destroyed. My quest is to find the exceptional one, that one in a billion. The one who conquers all the challenges with all but one idea. To be that one in a billion. To be a unicorn. India is becoming the startup capital of the entire world. And this is our quest to find the next unicorn, the next company that's valued at $1 billion. Our adventure, our quest begins. This is Unicorn, chasing the startup dream.
For English, dial 1. For your loan account, dial 5.
Yeah, hi, I've just been talking to your executives and they're saying that I need to... Okay, I'll hold. Yes, hello? What are the documents that I need to give you? Can you help me out with this?
No matter how much we earn, what the status of our bank balance is, how successful we are in our careers, if there's one thing we've all struggled with, it's the cumbersome process of getting a personal loan. Be it the complex and detailed terms and conditions, the ideal interest rate for you, or even the time of repayment. Banks love to throw around financial jargon, and I, for one, always fall prey to their terms and conditions. But today on Unicorn, I've found one such startup that makes such transactions a whole lot easier. Faircent has created a peer-to-peer lending and borrowing marketplace with one focused agenda that forms the DNA of this company, giving millions of people credit on demand. But here's what I want to know. Why would a borrower go to Faircent instead of a trusted established bank? Does Faircent have a system to ensure that only credible participants lend and borrow using its platform? Will Faircent's revenue model ensure success for the startup?
You're pushing envelopes on every aspect in this business. Some of them actually said, "Tum Ambani ho kya?" Can you really pull it off?
If there's a duo that exemplifies the stereotype of those who walk away from a cushy, high-paying job, it's these two risk-takers, Rajat Gandhi and Vinay Matthews.
What we are passionate about is how can we reduce the cost of capital for the borrowers.
After working for 18 years in the internet business, this opportunity was too good and too big to resist.
I'm quite confident this is the next big thing.
And the next big thing, according to these two industry veterans, is their venture, Faircent, a peer-to-peer lending marketplace where potential lenders and borrowers can strike deals at a mutually favorable interest rate. But in a segment where banks monopolize transactions, will this startup strike gold?
Faircent, at the heart of it is a very simple model. You have money, you go and give it to the bank. They charge you anything 4 to 6% or in any other deposit scheme you put in. And when you need money, you go to the same bank, they charge you anything between 18 to 36%. So what is the intermediary doing? They're aggregating monies from you and giving it out to some other people depending on the risk profile. What Faircent does is connects these borrowers and lenders. So supposing you come to me and you say that you're getting a loan from a bank at 20%, there's another gentleman who could give you at 15% because his cost of capital is 4 to 6%. And so it's just not an open, free-for-all marketplace. It's a curated marketplace.
So Faircent's revenue model is from lenders as well as from borrowers. So we take a cut from the lender. On the borrowing side, there is a processing fee that the borrower has to pay for the services that we give them. On the lending side, anybody who is investing on the platform can earn right from 15-16% upward of 24 to 25%. There are people on our platform who are earning 25% returns.
Lender, borrower, interest rates. This is the sort of conventional jargon that you would hear thrown at you in a bank. But at the colourful Faircent office in Gurgaon, the mood and the vibe is anything but conventional. The founders command a strong team of 25. In the short stint of a year and a half, the founders say they've built a strong database of around 200 customers each month. Peer-to-peer lending is a model that's been pretty successful across international borders. But how difficult was it to convince the big sharks back home to loosen their purse strings and shell out the big bucks?
We've received few tranches of funding, nearly little more than $500,000. Last valuation was $8 million. We have received funding from M&S Partners. Then we have received recently from Mohandas Pai through his fund called Aryan Capital. So these are the two major investors in our company. And then of course they have some few friends and family. Our ex-bosses have invested in our company, which was a big testimony for us.
Now, while the founders make it all look very simple, I had to head on over and figure out how these transactions work. And of course, get some answers to the big question on my mind. How does Faircent differentiate itself from the big banks? Faircent is a peer-to-peer lending marketplace. Why should I or anyone else opt for Faircent over a traditional bank?
Traditionally, if you look at it, banks charge a higher rate of interest because of cost of capital and the other costs that they have. But for our lenders, who are retail people, they don't have a cost of capital. So that's the reason they're able to kind of reduce the cost for you. So they bid to give you a better rate. So if you're a good profile coming onto the platform, lenders are excited about offering you a rate of interest which is very, very attractive. Sometimes it's even 12%, which no bank can match.
How does Faircent simplify the lending and borrowing process for a person?
So for a borrower, it's very simple. He has to register on the site, submit few documents, there you go. And if you're a good borrower, you can get funded within 10 minutes. But from the lending perspective, people typically have this apprehension that there is this money that I have to give to somebody unknown. Is my money safe or not? We do a lot of things for the lenders to make sure that that risk is mitigated. So one, what we do is that we curate the borrower at a very high level. Second is that we don't allow any lender to put more than 20% of the borrower's requirement. Third is that we do a contracting between the lender and borrower. Today is an offline process, but very, very soon we're going to make that contracting through Aadhaar. We also collect some checks as a guarantee, security. In case if he's not paying, we can bank the check and bounce it. But having said all of this, there is still risk. Yeah. So we don't want anybody to come onto the platform thinking there isn't risk. So we don't write anything on the platform which says assured, guaranteed, 100%. We don't write any of that.
So Rajat, what are the laws and guidelines governing the peer-to-peer lending space?
There are no specific guidelines from any of the regulators for a marketplace like us, except for the IT Act which governs a marketplace. And so we are a legal business, but not specifically regulated.
But the true test of any product is the customer's verdict. Let's see what the clients of Faircent have to say.
I was actually looking for a loan for buying a motorcycle, a high-end Harley-Davidson motorcycle, which on average costs about 15 to 17 lakhs. So the biggest problem I face with the banks is that the banks usually don't, first of all, give a loan on high-end motorcycles. At this point of my life, when I think I can afford my passion and then not being able to, do it, that kind of makes you a little bit sad, frustrates you, a company like Faircent helps you to fulfill your dreams and passions, where a bank cannot help you. Even for people who are in desperate need for money, I think they will help them also in a flexible way, not as rigid as usually the banks are.
Meet Harish HV, a partner in the India leadership team for Grant Thornton. He has over 25 years' experience in corporate finance and consulting and leads Grant Thornton's efforts in engaging with technology startups across the country. Our second mentor is Vikram Upadhyay, the founding chief mentor at GHV Accelerator. Vikram has been actively associated with Angel Networks through his career and founded GHV Accelerator in 2014. GHV has enrolled 5 startups from around the country up till now.
Faircent, I think the team is amazing.
Peer-to-peer lending is a very significant opportunity in most countries.
P2P lending is something which is little early, new for the Indian market. The only challenge is the policy side of it. If they are scaling, they have to keep in mind they are following all the compliances. The policy is in their favor of the business model.
In effect, you are doing some degree of disintermediation like a bank. And they have to engage with the regulator to ensure that they are within the right side of the law. If they can address these issues, definitely they should be bigger than a unicorn because the opportunity is great.
They say that starting a startup requires a strong appetite for risks and the ability to walk away from a perfectly good job. Which is why it is important for every aspiring founder to identify the areas that are going to become gold mines for startups in the next few years, so that they can create a product or service that will actually sell and make money. So we went and asked NASSCOM's president R. Chandrasekhar about the sectors on which he's betting big for startups in India.
I would put healthcare as number one because there's a huge opportunity there. The products and services that the industry creates in India have instant global applicability and replicability. The second would be in the area of cybersecurity, where we have actually hardly started. But this is an area where the problems are guaranteed to escalate going forward. The third big area is something which I tangentially referred to, which is IoT, and the advent of Internet of Things and connected devices opens up a combination of hardware and software to create solutions in areas like agriculture, in areas like energy management.